Belle with the Simple Money Project here with your 1 minute market update. So, on April 2nd, the White House announced tariffs on just about every country in the world. And in response, the S&P, which is the index that tracks the 500 largest American companies, dropped about 12% over the next few days. Then, a few days later, the White House announced a 90-day pause on the tariffs, and the market rose on that news. But, including today's modest 0.8% gain, the S&P is still down about 4% since the tariff announcement. It's important to note that China was not on the list of countries that received the tariff pause. In fact, their tariff rate was increased to 145%, and China responded by putting a 125% tariff on U.S. goods. Over the weekend, the White House announced that they would exclude tariffs on smartphones, computers, and some other electronics, which are mostly imported from China, which is a big break for tech firms like Apple that rely on those imported products. Something else interesting happened in the same time period. Usually, when we see the market dropping, we see the demand for bonds and U.S. Treasuries rise. This is called a flight to safety, where people sell equities, stocks, and buy bonds. But this time, we didn't see that. Instead, we saw demand for U.S. bonds fall. What does that mean? Well, it might be a sign of a deeper issue. American bonds, particularly American government bonds, have long been viewed as a stable and risk-free investment. This movement out of bonds may be a temporary upset, or it might be saying something about what the market thinks about the U.S. government's ability to function. Either way, analysts are paying close attention to this unusual move on the bond side of the market. There's a good chance we'll continue to see more volatility as these things get sorted out. So, if you're interested, follow the Simple Money Project for daily market minutes, where I touch on the highlights of what's happening in the market in as close to 1 minute as I can possibly get.